Like any financial asset, cryptocurrency also needs a safe place to be stored and accessed from time to time. Today, billions of dollars worth of cryptocurrencies like Bitcoin and Ethereum are stored in digital storage known as crypto wallets. These wallets are being used to store Bitcoins or many other cryptocurrencies. However, there is a lot more to these wallets besides storing cryptocurrencies. If you have no idea what they are or are still confused about how they work, don't panic. Because most new investors have had a hard time understanding them well. In this video, we are going to review not only the main idea of cryptocurrency wallets, but we're going to go into how they actually work, their types, as well as some of the best ones to choose from. So first, what is a cryptocurrency wallet? Well, in the most basic form, crypto wallets are simple program software, or systems, that enable the storage of public and private keys. The usage of these public and private keys allows the user to send, receive, and also monitor their assets. Before we continue, let's talk a little bit about private and public keys. So whenever you have a wallet, you actually have two keys. The public key is the one that you can share with your friends so that they can pay you. But there's also a private key. Technically, the private key is your password. Take this example. Your public key is actually also your address, like a PayPal email. Anyone with that public address can send you money if they had your PayPal email. However, your private key is the password to your email. If you share this with someone, they can have complete and total access to your money. Now with your public key, you can only receive transactions. But with your private key, you can send them wallet store. Here's an example of what each public and private key might look like. Now, one thing you need to know about different cryptos is that they have different address structures. Which means the addresses of Bitcoin, Ethereum, and others are different. The addresses that I'm showing have no money in them, but the keys just seem to be a seemingly random mix of letters and numbers. I just wanted to show you what they look like. So basically, a wallet is a public key and a private key. So let's move on to how to store these keys in 3 different wallet styles. The first type of wallet you can put your currency into is a software wallet. Now, these wallets are usually online-based. Exchanges like Coinbase or Binance are great examples of software or online-based wallet. The public and private keys are stored on their servers and they let you access them through your account. Now it is important to know that they could technically spend your crypto because a private key or the password is on their servers. Next up, we have a hardware wallet. So if you don't trust your information with a company or being online in itself, you can actually opt into using a hardware wallet. These wallets are basically USB sticks that store your public and private keys for you. You can unplug them and then basically no one has access to them. But these wallets usually have a very secure process of getting into them. For example, the Ledger Live uses a 24-key phrase system to enter into its system, and there is no recovery process. If you forget them, for example, if you forget those 24 phrases, your crypto is gone forever. But this is a double-sided sword, though. Nobody is going to be hacking into your crypto unless they get access to the ledger and know the password to get into it. One thing to know here is that these physical devices can start to get a little bit pricey. I actually bought mine for around $90 a few months ago. Finally, we have a paper wallet. So the last wallet you can use for crypto would be a paper wallet. And this wallet would consist of your private and public keys and maybe QR codes that are used to facilitate cryptocurrency transactions. Basically, your public and private keys are literally written down on paper. You can think of this as using cash to debit cards, though. One of the largest problems with this method is the ability to lose or destroy the piece of paper. If on purpose or by accident, now this is the most secure way to store your crypto. But it's also the least practical, which means you should only use this if you have a large sum of money that you want to protect but do not access very often. Because you'd be typing in that private key every time you want to make a transaction. Another thing you need to know about wallets is that they are classified into the 2 categories, hot and cold. A hot wallet is one that is connected to the internet, whether it's through another company or your own computer. It can be accessed online or through an application. A cold wallet, on the other hand, is one that has to be connected to a computer, like the USB method or having it written down on paper. We call these offline wallets. So now that we know these 2 basic types, we can discuss if they are secure or not. If you're using a hot wallet, it'll always be vulnerable to online attacks, and hackers are always trying to find the best new way to access a system. Once your private key is public, you can practically kiss your Bitcoin goodbye. However, if you're using a cold wallet, the biggest vulnerability is either losing it or forgetting the passwords. It really depends on the applications. For example, if you're mining crypto and you want to immediately send that crypto somewhere, you can use a wallet like Coinbase. But if you're investing hundreds of thousands of dollars, you may want to invest in a ledger Live. That way you can unplug the USB and ensure that no hackers can get access to your private keys. Now this is the chance for you guys, especially those are newcomers to crypto exchanges, because we provide numerous bonuses and promo codes. You can get 20% off all trading fees just by clicking on the link or using the code for registration in the description below. Thank you so much for watching, and we hope to see you in the next video.